Ever wondered if accepting Venmo for your small business is a game changer or a hidden headache? It's a question many entrepreneurs grapple with, especially as digital payments become the norm. In a world where convenience often trumps tradition, Venmo has emerged as a popular peer-to-peer payment platform, but its role in the small business landscape is a bit more nuanced. For years, cash was king, then credit cards took over, and now we're in the era of instant digital transfers. Venmo, with its social feed and user-friendly interface, has captured a significant market share, particularly among younger demographics. It's the go-to for splitting dinner bills, sharing rent, or chipping in for a group gift. But when it comes to your business, can this casual payment app really stand up to the rigorous demands of sales, accounting, and customer service? Think about it. Your customers are already using Venmo in their personal lives. They're comfortable with it, they trust it, mostly, and it's incredibly easy for them to send money. So, from a customer's perspective, offering Venmo could be a huge win for convenience. No fumbling for cards, no worrying about cash, just a few taps on their phone and the transaction is done. This ease of use can translate directly into more completed sales, especially for impulse purchases or services where a quick payment method is appreciated. Imagine a pop-up shop where customers can seamlessly pay for their unique crafts or a freelance designer receiving payment for a quick consultation. The less friction in the payment process, the better the customer experience. However, the simplicity that makes Venmo attractive for personal use can also introduce complexities for businesses. Unlike traditional merchant accounts, Venmo was initially designed for individuals. While they've introduced business profiles, there are still differences in how transactions are handled, the fees involved, and the level of protection offered. It's not as straightforward as just linking your bank account and calling it a day. There are specific considerations around taxes, chargebacks, and the professional image you want to project for your business. This isn't just about whether you can accept Venmo, but whether you should. We're going to dive deep into the pros and cons, explore the different ways to use Venmo for your business, and help you determine if it's the right fit for your specific needs. We'll cover everything from setting up a business profile to understanding the fee structure, and even touch upon the often overlooked aspects of customer service and dispute resolution when using a platform like Venmo. By the end of this, you'll have a clear picture of whether adding Venmo to your payment arsenal will be a strategic advantage or a logistical headache. The allure of Venmo, why small businesses are tempted. Let's start with the undeniable upsides. The biggest draw of Venmo for small businesses is its ease of use and accessibility for customers. Your target demographic, especially if you cater to younger crowds, is likely already on Venmo. Offering it as a payment option means you're meeting your customers where they are. This can lead to increased sales and conversion rates. The smoother the checkout process, the less likely a customer is to abandon their purchase. If they can pay with an app they already use and trust, it removes a significant barrier. This is particularly true for businesses with lower price points or those that rely on quick, on-the-go transactions, such as food trucks, street vendors, or small service providers. Convenience for mobile businesses and pop-ups. For businesses that don't have a traditional storefront or rely on mobile sales, Venmo can be a lifesaver. No need for bulky card readers or complicated POS systems. All you need is your phone, and your customer needs theirs. This flexibility allows for greater mobility and wider reach. Reduced transaction fees, potentially compared to traditional credit card processing fees. Venmo's business transaction fee, currently 1.9% plus 10 cents per transaction for standard business payments, can be appealing, especially for smaller transactions where fixed fees on other platforms can eat into profits. For comparison, credit card processing fees often range from 2.5% to 3.5% or more, plus a per-transaction fee. Faster access to funds. While not instant for business profiles, Venmo payments generally clear faster than traditional bank transfers or checks, which can be crucial for managing cash flow in a small business. Marketing and social proof. With caution, the social feed aspect of Venmo can, in some cases, offer a subtle form of marketing. When customers pay you and add a note, their friends might see it, potentially exposing your business to new eyes. However, this is largely dependent on user privacy settings and shouldn't be relied upon as a primary marketing strategy. Imagine you run a small artisanal coffee stand. A customer wants to grab a quick latte but only has their phone. If you accept Venmo, the transaction is seamless, and they're on their way with their coffee in hand. This kind of effortless experience can turn a one-time customer into a regular. The hidden hurdles, where Venmo can trip up your business. Now, let's talk about the potential pitfalls. While Venmo offers convenience, it also comes with a set of challenges that traditional payment processors are designed to handle. Limited fraud protection and chargebacks. This is perhaps the most significant concern. Venmo's primary design is for peer-to-peer payments, which means its fraud protection for businesses isn't as robust as what you'd find with a dedicated merchant account. If a customer disputes a transaction, it can be much harder for a small business to win that dispute and recover funds compared to a credit card chargeback process. This risk increases with higher value transactions. No PCI compliance requirements, but still security concerns. While Venmo handles the underlying security, businesses aren't directly subject to the same stringent PCI DSS, Payment Card Industry Data Security Standard, compliance requirements as they would be when handling credit card data directly. However, this doesn't mean there are no security considerations. Businesses still need to protect their Venmo account credentials and be wary of phishing attempts. Accounting and reconciliation headaches. Integrating Venmo transactions into your accounting software can be less straightforward than with a dedicated POS system or payment gateway. Each transaction needs to be properly categorized for tax purposes, and manually tracking them can become time-consuming as your volume increases. This can lead to errors and difficulties during tax season. Professionalism and perception. For some customers, especially those accustomed to more traditional payment methods, paying with Venmo might feel less professional or secure, particularly for higher-ticket items or services. While this perception is changing, it's something to consider for your brand image. Transaction limits and holds. Venmo has daily and weekly transaction limits, and they can place holds on funds if they detect unusual activity. This can impact your cash flow and ability to access funds when you need them. While these limits are generally higher for business profiles, they are still present. With that said, thanks for watching, and until next time.